What's up, guys and girls? How is everyone doing here this fine Sunday evening? What's up? What's up? What's up? 1.9. $1.9 trillion in stimulus being approved by the Senate. All right. We've got a lot to go over here and discuss tonight. Okay. Stimulus package. Check. 1.9 trillion. It's a lot of money. What does that mean now? What does that mean now for the overall markets? The markets over the last couple of weeks have been under a lot of pressure. They've been under a lot of pressure because of rising fears of inflation, rising 10-year Treasury bonds, which were expected to reach 1.5 by the end of this year. They are already over 1.6, and it's March. The speed in which the 10-year Treasury bonds have risen over the last week is what put pressure on equities. The markets are in a really funny place right now. Markets are in a really funny place right now because it's like almost like a damned if you do, damned if you don't type of scenario, where the markets are trying to balance and decide between, okay, a strong economic recovery coming out of COVID. Well, that's a good thing, right? Real strong GDP growth. Everyone's going to get back to work. I mean, that's a good thing, right? Or is it? Because the faster that we recover, the faster that the unemployment rate drops, the greater the potential of inflation, the faster the Federal Reserve may move to raise rates. That's the balancing act the market is trying to figure out over the last 2 weeks. And that's why you've seen the 10-year Treasury bond spike. You did have Treasury Secretary Janet Yellen try to ease inflation concerns by saying that, oh, well, the real unemployment rate is really around like 10%, which means that we still have a long way to go until we would reach a max unemployment or a max employment, I should say, to where the Federal Reserve would raise rates. The markets are trying to figure out if the Fed is telling the truth. The markets are trying to figure out if the Fed is correct in their expectations and assumptions of what is going to be taking place over the next year. We have the Fed funds futures are actually pricing in a rate hike in March of 2023. That possibility or expectation is now starting to actually move up to a partial rate hike in October of 2022. The closer that expected rate hike gets, the more shaky markets will be. And you're in a situation where you're almost at a point where better economic data almost is a net negative event for the markets. As weird as that may sound, because of the inflation concern. So I'm actually surprised right now with the futures market. We're basically flat. We're up a very small amount. Last I checked, we're up like 0.2% on the S&P, maybe 0.15% on the S&P, I think a couple minutes before we started this live stream, which is very minuscule. I actually thought the news of the stimulus passing was going to gap us up further. I thought we'd be up at, 38.50, 38.60. I thought we'd be much higher on the S&P than where we are currently sitting right now. As I am sitting here doing this live, I'll give you guys, we're at 38.48. We're up 0.2%. We're up 0.2%. Okay. So, I mean, basically flat. Nothing really major on the futures market reacting to this news. But there's a lot of moving parts that we're going to talk about here today on this live stream regarding the stimulus and regarding what is moving markets right now, because it's bond yields, It's the US dollar. These are things that everyone, you're going to have to start to pay attention to. So this is going to be a little bit more of a macro type of understanding as far as market movements, market fluctuations, and what are the headlines that could potentially move markets up and down. So we have a lot to kind of unpack here. I've added a bunch of stocks in my long-term portfolio. Thursday and Friday, I was very active. I was a net buyer in my long-term portfolio. Thursday and Friday, I added 6 new positions in my long-term portfolio. I will go over with you guys on this live stream those new additions for those that have missed the previous live streams. I'll fill you guys in. We'll talk about that, and I'll tell you what I expect the market to do now this week, now that we've got this stimulus news passing. What does that mean for markets, and where do we go from here? Welcome to the True Trading Group live stream. For those of you that are brand new, first thing you want to do is subscribe to the channel, turn on those notifications, and of course, smash that like button, because on every single one of these live streams, I will share with you golden nuggets of information, free lessons, whether it's a technical lesson, a mental lesson, whether it's day trading, swing trading, stocks, options, you name it. We trade it into Trading Group, small caps, mid caps, large caps, ETFs. We do it all into Trading Group. There's 6 other moderators besides myself that each specialize in different trading styles and strategies. So there's something there for everyone. So like I said, welcome to the TT live stream. My name is Michael Edward. I am the head trader at True Trading Group. I began my career working for a fund in New York City. They taught me how to become a trader, plain and simple. I did not figure this stuff out on my own. I was taught. They did not let me touch $1 of their money until I passed their educational training program. That is where I learned how to be the trader that I am today. I've simplified that education, created a curriculum for my TeachD members, so they're getting a professional education when they go through all the TeachD courses. And on these live streams, I share with you golden nuggets and bits and pieces of that education totally for free. So make sure you subscribe to the channel, turn on those notifications, and of course, follow me on Twitter. All right, my Twitter handle right there at the bottom of the screen. It's at @MikeEdward_TTG. All right, at @MikeEdward_TTG. Go ahead there and give me a follow on Twitter. I'm always sharing with you guys like trade ideas, trade recaps, general market commentary. Usually whenever I enter a swing trade or something like that, I'll post it up on Twitter. Or I did let everyone know on my, let all my Twitter followers know the stocks that I added to my long-term portfolio when we let me see here. US futures. I'm just going over and looking at the futures market here real quick, guys. Let me see. 1.9%. Yeah, okay. So I'm just keep checking on the futures market. That's all. All right, guys. So we have a lot to go over here today on the live stream. So like I said, guys, subscribe to the channel, turn on your notifications if you guys are brand new. All right. So listen up. Now that we've got stimulus, what the hell is in store for us now? What the hell is in store for us now? Okay. It's like, what, this is something that, we always expected kind of that we were going to get another stimulus package. I mean, some people maybe didn't think that 1.9 trillion was going to be possible, that number was too high, that it wasn't going to pass. And now that's passed, what does it mean for the stock market, and how can we make money from it? But guys, what you've experienced over the last 2 weeks, in the markets is just the absolute definition of volatility. And when we look at Friday's trading action was nuts. We started off the morning very, very weak. Market sold off. We were down, I don't even remember, 500-600 points or something like that on the Dow. As we sold off Friday morning, and then the markets just stick their foot in the ground and we rally back. And the environment that we're in right now is one that I really want you guys to kind of welcome with open arms, because the volatility and the moves that you're getting in the overall market right now are insane. You're getting the SPYs moving 10 points in a single day. That's not normal price action in the SPY by any means. 10 points in a single day in the SPY is not normal price action at all. Usually you're lucky if you get a 3-point range on the SPY when you're dealing with a normal market environment. The fact that we're getting 8, 9, 10-point moves throughout the course of the day and a 10-point spread between high and low, it's just insane. You have opportunity to the short side, you have opportunity to the long side, all within the same day. Like Friday, I was able to make money to the short side in the morning, and then the markets just rallied in the afternoon, and just it was like two completely different type of trading days. Down in the morning, rally back in the afternoon. And I actually think that we're going to get a lot more of that type of action. I think that we're going to get a lot more intraday volatility and change in directions during the day. I do think that we are going to be looking at some overall market plays as we kind of move forward here. I am kind of actually hoping that the markets take a little bit of a chill pill like Monday, Tuesday, and kind of digest stimulus news and don't necessarily try to make a huge move one way or the other. I don't want to see the markets tomorrow try to like run back to all-time highs. I also really don't want to see the markets tomorrow pull back and go down like a percentage point, because if we go down like a percentage point after getting our stimulus bill passed, I just think that would be a negative sign. I would look for us to push higher tomorrow. I just hope that it's not too big of a push. I kind of want things to kind of digest a little bit as we kind of try to figure out this whole inflation issue and how much of a recovery is too much of a recovery, how strong of a recovery is too strong. We're going to get into that today on the live stream. I have a lot of things that I kind of want to go over with you guys. I'm sure we have a bunch of questions from people as well, but this is the market that you have to be diversified in. I actually just did a workshop on Saturday with my TGD members that was how to trade in down market. We've had a lot of movements to the downside over the last 2 weeks. A lot of people were getting very nervous. You had the NASDAQ pull back 10%, you got a 10% correction in the NASDAQ. A lot of people that just started getting into the markets because of what happened last year never really saw, a 10% correction. And some people were getting very, very nervous. So I decided to do a workshop called How to Trade in a Down Market. And I went over a lot of different golden nuggets of information when it comes to shorting, trading options, long-term portfolio building. Trading a down market is something that I excel in very well. I did very, very well in the March 2020 sell-off with the coronavirus, trading the TVIX, trading options. I was loading up my long-term portfolio and really was able to benefit in a huge way from that sell-off and that crash, not only just from active trading, but long-term portfolio adjustments. I was really able to come out of that on top. And then when you go back to 2008, 2009, which was the subprime mortgage crisis, that's when I was working at the fund. And in 2008, I actually received a Trader of the Year award from the fund that I was working at for my performance throughout that year. And obviously 2008, 2009, that's when, the markets fell 55%. We went from 14,000 on the Dow all the way down to 6,600. So what I want to do real quick, guys, I just want to see my TTG members. Okay, my TTG members that are on the live stream right now, I want to know if you guys enjoyed the workshop. We actually had two things on Saturday. We had Weedapalooza workshop with Jason the Wolf, and he went over the pot stocks and what the political environment means for marijuana stocks and how to capitalize on it. And then I went over the how to trade in down market. So from 12 to 2 p.m. Eastern, Jason did the Weedapalooza segment, and then from 2 to 4 p.m. Eastern, I did how to trade in a down market. So my TGD fam, if you guys are on the live stream right now, I want you guys to comment real quick in chat. Let me know if you guys enjoyed the workshops on Saturday. This was something that was totally free for TGD members. We do this often. Okay, often myself and the other moderators, we hold workshops and live events for members, no additional charge or fee or anything like that. It's totally included with your membership, but with the way the market's traded the last 2 weeks, I saw a lot of people were getting nervous. And I wanted to kind of just have everybody take a big, deep breath and understand that there's multiple ways for you guys to make money in the markets. You make money on the way up, you make money on the way down, you make money when markets are sideways. This is what being a real trader is all about. And the biggest quote that I left all of my members with on Saturday was, do not ever let your desire for instant gratification cause you to miss out on long-term wealth building opportunities. And that's the quote that I that I kind of left everybody with, and that kind of helped calm people down a little bit. And during that sell-off, I was actually buying in my long-term portfolio rather than panic selling like a lot of people were starting to think about doing. So we're going to talk a lot about that here today. Yes, it was recorded. Yes, it was recorded. All right, both will be available on your dashboard tomorrow, guys. Okay, the session was recorded. So if you missed it, don't worry. The workshop will be uploaded in your member dashboard in that video library. It'll be uploaded by tomorrow. Shug and the team are all over it. So that should be on your member dashboard by tomorrow for anyone that missed that workshop. But I'm glad to see a lot of people were commenting while I was talking. I saw some of your comments. So, I'm really happy. It was a Saturday well spent. A Saturday well spent. We, 4 hours of additional education on a Saturday. It was my pleasure to do it. Happy to do it. I hope you guys learned something from it. And TGD fam for life. I love you guys. All right, cool. So listen, what we're going to do, we're going to start off the live stream with a blanket open floor Q&A session here first. All right, we're going to start things off with a blanket open floor session Q&A. Let me see here. I'm sorry, guys. Hold on a second. I'm just reading a bunch of messages that are coming through right now. You know what? Here, those guys. So listen. So those workshops were for TGG members only. Okay. If you're not a member of True Trading Group, then you would not have been able to attend. And obviously, if you're not a member of True Trading Group, you're not going to be able to go back and view it later because it's going to be loaded up on our member dashboard. Okay. So it was for TGG members only. But how many people here is it your very first time on a TGG live stream? If you guys have never been on a TGG live stream ever before, type the letter I in chat right now. This is your very first time joining us on a TGG live stream. All right, we got Jack Barringer, Chief, Raka, Shant, Blake, Dice, Frankie Fur, Z Workouts, Electric, Music, Phil Kress, Tom McCabe, Stockton, Brian Jarrells, Drew Booz, PFM Enterprises, Alberto, Tapaiwa, Some Stupid Health, Brian Tatum, Andres Hernandez, Jesse Alvarez, Loic Seguin, Brian Neslusan, Curas de Jesus, Just Praise, Tony High Class Records, David Doyle, Charles Van Stockham, Fadi Youssef, Robert Belton, Tony Fugazi, Vague, Alan Wu, Stephen Hendricks, Ryan W., Manny Mansilla, Dr. Gurdeep Singh, Perico Sapiens, Baba, Ryan Dana Miller. Beautiful, guys. David Franco. We got a Loving Yourself First, 36 Maple Ave, FG, November Ball, Nirmata. I can't even keep up. There's so many that are typing. I'm sure I missed a bunch of you. I missed a bunch of your names. I missed a bunch of you, but welcome. All of you that are brand new, seriously, you guys are in for a real treat. Congratulations on finding the channel. You want to make sure you subscribe and turn on the notifications. Don't ever miss out on any one of these live streams because on literally every single live, I share with you free lessons, golden nuggets of information. Like I said, day trading, swing trading, stocks, options, you name it. I share it with you guys for free on this channel. Here, that's on the live stream understands there's a lot of different types of trading styles and strategies that, this is, TGG is not a group where it's like, hey guys, you have to trade like me or else. No, there's so many different types of trading styles. There's swing trading, day trading, shorting, long-term investing, options trading, high volatility, low volatility, trend continuation, trend reversal, a lot of different types of trading styles. All of these styles are discussed and taught in depth in True Trading Group. We have 6 pro trader moderators in chat. All of them focus in at least one or more of these different types of trading styles. And you have access to all of these moderators throughout the course of the day. So don't feel like, oh, I'm not a day trader. I only swing trade, so this is not for me, or I only trade options, or I only trade large caps, or I only trade small caps. I like high volatility. I don't like volatility. There's something in True Trading Group for everybody, guys. All right, something in TG for everybody. So, like I said, all right, before I get into the meat and potatoes of the live stream, okay, before I get into everything on the live stream, we're going to start off with like a 20-minute Q&A. All right, so go ahead, guys, fire away, ask me questions. We'll give some time for people to log on. All right, and then we'll dive into the stimulus package. Portnoy and Buzz, ETF Buzz. ETF Buzz, I'm actually not really, I'm not sure how that thing's going to perform, because I think they're always going to be behind. You know, so what Buzz is, let me explain to everybody what Buzz is. It's a new ETF where they are going to be working on trading social media buzz stocks. So not social media stocks, okay, in general, not social media stocks, but they're using AI and algorithms to kind of comb through social media platforms to see what stocks everybody's talking about and what's the sentiment on them. So basically, like the GameStop Reddit craziness, you know, they're going to use an AI or an algorithm to kind of comb through and see how many mentions this one particular stock has on different social media platforms, and they're going to try to trade based on social media buzz. The ETF is going to rebalance every month. So I'm not really sure how mobile, like mobile's not the right word, how agile, I guess is maybe a better word, this ETF is going to be. It sounds like they're going to be very actively trading this ETF, because social media buzz, I mean, you can have one stock as the talk of the town for 2 days, and then all of a sudden no one's talking about it again. So, you know, this ETF is essentially going to become like it's going to be actively traded. And I don't know how that's going to perform. Honestly, I don't know how it's going to perform, because there is so much social media hype that goes on right now, and there's such a megaphone that the retail investor has, and I just don't know if that's enough to push markets and is enough of a trading style for an ETF. You know, like if you look at like AMC and GameStop and all those Reddit stocks, aside from that, you know, or you know, if you caught that short squeeze, I mean, aside from that though, I don't know how that ETF is. I don't know. I think having a lot of hedge funds do this already, by the way. This isn't something that's brand new. A lot of hedge funds for a while have AI programs that scan through social media to kind of get sentiment trackers on particular stocks. So this isn't something that's new. This is not something that's proprietary. A lot of funds do this, but there's just never been an ETF that trades only based on social media buzz. So I'm not too crazy about the idea. I think that it's going to be like a lag type of indication. I think it's one thing if you're going to use like a social media sentiment tracker in conjunction with some other type of analysis that you would be doing. I just think it's like, you know, and it's funny, you have David Portnoy, and it's like, okay, well, if David Portnoy talks about a stock, it'll trend on social media because it has millions and millions and millions of followers. So the fact that he was launching this Buzz ETF, it's like you are the social media sentiment. You know, it's like, you know, you say on Twitter that you just bought this whatever stock, you just bought AMC, you're going to get 1 million people right away are going to like, comment, and retweet that you just bought AMC. So, you know, I'm not quite sure how this is going to go. Tips for new investors. I feel like I understand some of the basics, but generally feel lost and unsure of where to start or invest. Phil, my advice to you, brother, honestly, is join True Trading Group. I know you might be like, oh, yeah, no, duh. Like, of course you would say that. But honestly, man, I'm being dead serious, because the most important thing for you as a new investor is to actually get yourself an education, to understand and to know what you're doing before you actually start putting all your money to work. A lot of my teaching members never traded a stock a day in their life before they joined True Trading Group. Some of my teaching members, if you guys were complete total noobs, noobs means newbies, like if you were totally new, you had never done this before you joined, just comment in chat. Maybe you guys can help Phil. I'm kind of explaining to Phil how your journey went when you guys maybe first joined TTG and actually got an education. But my advice to you would be to actually make sure you get a professional education before you go ahead and start trading or investing. Because I think the biggest mistake that a lot of new traders or new investors make is that they put money into a trading account. They're like, oh, let me see if I can do this. But you have no idea what you're doing. You have no clue what you're doing. So to think that you're just going to put money into a trading account and just start trading and buying, selling stocks without having any real understanding of why the stocks are going up or down in the first place, to think you're going to actually succeed, it's foolish. It's foolish. It's naive. It's arrogant. To think that you're just going to put a couple $1,000 in a trading account, you just step into someone else's professional arena and think that you're going to succeed. It's foolish. It's so foolish. It's so foolish. Like I would never step into, I always make this analogy. I would never step into the octagon with a UFC champion and think that I have even a 1% chance of being successful, because I've never trained to be a UFC fighter. To think that I'm going to get into a ring with a UFC champion and think I have a chance of beating this person would be the most arrogant, foolish thing that I would have ever done literally my entire life. And I'm sure it would cost me a couple of teeth, maybe a concussion, and a couple of broken bones. And rightfully so. I would deserve to get my absolute ass kicked for thinking that I'm going to step into someone else's professional arena with no training whatsoever and think that I had a chance of succeeding. I'd be an idiot. I would deserve to get my ass kicked. When you put money into a trading account and you start buying and selling stocks without having any idea what you're doing, it is the exact same thing. You're foolish for thinking that you're going to step into someone else's professional arena, my professional arena. Okay, the trader at Goldman Sachs, the trader at the hedge fund, the trader on the trade desk, like the trader that's on the floor of the New York Stock Exchange, to think that you're going to beat them in their own professional environment is foolish. So instead of you losing some teeth, getting a concussion, and having a few broken bones, you're just going to lose all your money. You got your ass kicked, and you deserve to get your ass kicked, because for you to be arrogant enough to think that you're going to succeed in someone else's professional environment without any training whatsoever, it's foolish. That's why you hear the stat 90% of traders fail. That's probably true. It's probably true, but it's not because trading is so impossible. It's because most traders do exactly what I'm talking about. They put a couple $1,000 in a Robinhood account. They go and say, oh, my buddy, at work told me to buy this stock, or, oh, I read on Reddit that I should buy this stock. And you have absolutely no idea why. No idea why. But you do it anyway, or you buy some option. You have no idea how options even work. You don't even understand what the hell an option contract even is. Most people that buy out, they don't even know what it is. Literally, they don't even know what it is, what it means. What does it mean when you buy an $8 call, March 12th expiration on AMC? Like, what does that even mean? Even know what that represents? Most people don't. But they have no problem taking $2,000 and buying it. It's crazy to think that you're going to succeed that way. So my advice to you is to make sure that you get yourself an education before you do anything else. What effect do you think the stimulus will have on GLD, paper monopoly money versus gold? Okay, so gold has actually underperformed lately because you have rising rates. Rising rates have actually put some pressure on gold. Okay, what do I think the stimulus is going to have on gold? The way that the stimulus is going to affect gold is that you have that stimulus, $1.9 trillion in additional stimulus, which is an astronomical amount of money when you think about how much money has already been kind of applied stimulus wise. We talk about from a fiscal standpoint and a monetary standpoint. So that means monetary stimulus would be the stimulus from the Federal Reserve, stimulus from central banks. Fiscal stimulus would be, the stimulus programs that come out of Congress. When you combine the amount of stimulus that has come through both the Fed and Congress, it's an astronomical amount of money. The addition to the money supply that we've seen because of COVID is unlike anything that we've ever experienced before. So adding this much more stimulus and this much more, paper money to the money supply, you want to call it, has inflationary consequences. And that's why the markets have been kind of uneasy lately, because of these inflationary worries and these inflationary concerns. Gold is considered a safe haven in an inflationary environment. So, the effect that stimulus would have on gold is, if the stimulus, which I think it's just a matter of time, I believe that it will create inflation. The Federal Reserve is talking, they think that there will be inflation, but it's going to be transitory, which means it's just going to be like a gradual increase, or it'll be an increase once we open the economy, and then inflation will slow down. It's not going to run away. Okay, that's what they mean by transitory. When you hear that term probably a lot when you're talking about the Federal Reserve, and I don't think that's true. Now, I am by no means, nor am I trying to say that I'm smarter than anyone that works at the Federal Reserve. They're the best economist in the world, but that doesn't mean that they can't be wrong. Ben Bernanke in 2007, Ben Bernanke was the Federal Reserve chairman in 2007. So Fed Chairman Powell, Jerome Powell now, Ben Bernanke had his job back in 2007. Now, for those that are maybe too young to know this, 2008, 2009 was the great financial crisis, the subprime mortgage crisis, great stock market crash. Was an absolute scary time. We were probably 48 hours away from you going to the ATM machine and the bank saying, sorry, I don't have your money. It was a really scary time. The entire global financial system was on the brink of absolute collapse. And in 2007, Bear Stearns went out of business. Bear Stearns was an investment bank. And they actually went out of business because they were too highly leveraged in subprime mortgages, and they went belly up. Okay, because the subprime mortgages that they were using to kind of back assets, they just went worthless, and they were way too leveraged in subprime mortgages, and they went bankrupt. When that happened, there was a lot of concern, and there was a lot of people that were like, hey, is this an issue? Because everyone knew that the entire financial system, the housing market was on fire, was on absolute fire. So a lot of banks and institutions, they were using these mortgages to back other assets. So you hear like mortgage-backed securities. That's what that means. So you'll take one security and you'll back it up, or you'll secure it with a mortgage. Okay, but now what happened when the mortgage when the real estate market was red hot, you had banks actually reduce their lending requirements because they wanted to lend out as much as they possibly can, because the housing market was on fire. So they all wanted to make more money. So they actually lowered their lending requirements. Now that created a problem. You had people that were making 80 grand a year, owned 4 houses. That's a problem. They can't afford it. So once the housing market burst, and you had, you took out a mortgage for 500 grand, but now your house is only worth 400 or 350, that created a major problem. And all those mortgages then became worthless. And then, so if the asset that you are using to back or secure another asset with is worthless, then what's the value of the asset that it's being secured by? And that's how that whole thing kind of came to life. And people were so leveraged on this. They were literally buying 1,000 mortgages in portfolio chunks, and then using that to get leverage to back others. It was an absolute disaster. But anyway, I'm getting off topic. Ben Bernanke was asked in 2007, is this a problem? Is this a systemic issue? And Ben Bernanke's exact words, verbatim were, the subprime mortgage issue is well contained. Well contained was the exact words that he used. 1 year later, we found out it was not well contained. It was as systemic can be. And the entire global financial system was caught up and affected by this situation. and you had an entire collapse of the global financial system. So now, does that mean that Ben Bernanke was lying in 2007? I don't think there was malicious intent behind it. Some people, say whatever they want, but I just don't think that they were able to really realize how big that issue actually was until it showed its face. So could that be happening here again? The Federal Reserve keeps saying we're not worried about inflation. It's, it's still low. We're not worried about it really getting out of control. And that's very, very, very important. And that's very important because if inflation does rise too far, too fast, to where it does start to get out of control, that will force the Fed's hand earlier than what anybody would want them to do with raising rates. If inflation gets to 2.5, 3%, they have to raise rates. The Fed funds rate can't be sitting at 0. You're going to have to raise rates at 2, 2.5, 3, 3.25. You're going to have a real Fed funds rate in order to kind of slow down inflation. So this topic is huge over the next 2 to 3 years, 1 to 3 years, really. And Fed Chairman Powell keeps saying that, no, we don't see us raising rates till like 2023, after we have full employment and the economy's doing well. And he's like, I don't think inflation is going to be much of an issue. It'll be a slow climb and it'll be a steady kind of a normal inflation increase. It's not going to be this rapid spike that's going to catch us off guard. And that's what he keeps saying. Now, if that's true, then okay, then inflation won't be that much of an issue. And when they raise rates, they can raise them very, very slowly and allow the markets to kind of digest that. But if he's wrong, I think that's when wow, inflation's here a lot faster than we thought. We've got to raise rates. That's going to be a very, very good environment for gold. I actually think that gold is underperforming right now. I'm going to give you guys kind of my opinion on something, and it's a theory that I've kind of been playing with over the last couple of months. Why gold has been underperforming in what is seen right now as an inflationary environment. It should actually be outperforming, and I think that's because a lot of people are actually going after and investing into Bitcoin instead of gold right now to kind of capitalize on some of that extra alpha and to kind of be more diversified. And they're looking towards Bitcoin, which blows my mind to actually look at it as like a safe haven because it is such an insanely volatile asset that a lot of the money that would normally be flowing into gold, I think is actually flowing into Bitcoin. Now, that's all great and dandy now when markets are at all-time highs and inflation's not yet here for people to want to go after the higher risk asset, which would be Bitcoin compared to gold. Bitcoin much, much, much higher of a risk asset compared to gold, but also much, much, much higher reward, much, much higher alpha than compared to gold. But I think that if shit actually hits the fan and things actually do get out of control, I do think you're going to see a lot of institutional money go back into gold. I think that Bitcoin is actually seen as like, hey, let's put this into our portfolio now because portfolios are performing so well. You have all this extra performance cushion to like, let's ride this wave. Like, let's go into Bitcoin. Let's catch this extra alpha because gold is boring. But I think if we actually get to a point where shit hits the fan, I think you're going to see a massive rush into gold. And I think gold can shoot to 2,500 an ounce. So if inflation gets to a point where it's out of control, I'm very bullish on gold. I think gold can go to 2,500 an ounce. But we're going to have to see how this whole inflation issue plays out. So, I know I'm talking a lot about Shant Tavatian. I'm probably not pronouncing that correctly, so my apologies. But just join the THD fam. Shant, welcome to THD fam. My THD fam, give Shant a big warm welcome. He literally just joined the family. So I know it's kind of a long-winded answer, but it's a detailed answer. It's a very unique environment that we're in. It's a unique time that we're in. And I want to make sure you guys understand kind of the whole big picture of what this means. And it's not so simple as like a one-word answer or like even a one-sentence answer. So, when you ask, what is the stimulus? How is it going to affect gold? Hopefully that answers your question and sheds some more light on the entire situation as a whole and kind of gives you more of a little bit of a macro environment or macroeconomic view on things. Will the passage of the bill be enough to fuel the liquidity rally into April and May? Thoughts? I'm not sure what you mean by liquidity rally. When you say liquidity rally into May or April, are you saying that, do I think that, Americans are going to take their $2,000 stimulus check and they're going to put it into the stock market? If that's what you're asking me, I don't know. Will it be enough to fuel the liquidity rally? I think we're going to see such a massive economic boom in Q3 that you've never seen before. I think the Q3 GDP number is going to blow everybody's socks off. I think Q3 is going to be an absolute jolt of economic growth and economic activity. And you have Americans have 25%. Americans have 25% higher savings than they did previously, which makes sense. They're not going anywhere. It's easy to save money when you can't go out to eat, you can't go on vacation, you're not driving to work, spending money on gas, you're not getting speeding tickets, you're not getting DUIs, you're not going to bars. Easy to save money. What are you spending money on? Amazon. That's what you're spending money. It's easy to save money. I'm not surprised that Americans, 25%, Americans are saving. They're up 25% as far as savings is concerned. That makes sense. It should be the case. That should be the case. And now with all this, and now you're getting all this extra stimulus. And I got news flash. I got news for everybody. A lot of people are going to get stimulus that don't need it. A lot of people are going to get stimulus that don't need it. Now, there's a lot of people that really do need it. There's also a lot of people that don't need it. But some people that don't need it, they're going to get stimulus anyway. They're getting checks anyway, even though they don't need it. But they're still going to get it. You are going to see such a massive jolt in consumer spending, I think, in like Q2, Q3, because hopefully by Q3, we're really into the back end of COVID. Hopefully, more people get vaccinated, more people get it, more closer to herd immunity. More states ease restrictions, more businesses open. Like you saw Texas, 100% all businesses back open, 100% capacity. Even New York just opened up movie theaters. Like you're starting to move towards that opening, and I think that, maybe by Q3, we can really kind of be at the tail end of this where things are really open and people are traveling and people are driving and going shopping. They're going to eat. They're doing this. People are going back and they're doing things because these restrictions are hopefully lifted by then. And I think you see this massive jolt in consumer spending. I think a massive jolt in consumer spending. Do you think the energy oil sector will pull back for an entry? Janelle, I am still very bullish on oil. I think you are going to see oil at probably $75 a barrel pretty soon. I think you're going to be looking at $4 a gallon of gas pretty soon, especially as we get into the summer months. I'm very bullish on oil. I've been bullish on oil. December 2020, I did a live stream right here. And in December 2020, I said that my number one pick for as far as the sector is concerned, I said my number one sector pick for 2021, I said was energy. And when I say energy, I'm not talking green energy, traditional energy, oil. I gave actually 3 stock recommendations on stocks that I own in 2020 for 2021. One of them was OXY that I actually bought at $12. That stock is now over 30. I expect that stock to continue higher actually tomorrow, maybe 32, 33, 34, 35. Chevron is another one, and then OKE was another one that I bought back in 2020. I am absolutely crushing it on those positions. My energy sector of my portfolio is absolutely on fire. It's one of the best performing sectors of 2021, energy and financials. So if you're asking, do I think the energy sector or oil is going to pull back for an entry? If it does, I think you jump on it. If it does, I think you jump on it because between now and the summer, okay, sure, oil will pull back. Oil just got a 2% spike because there was just an attack. There was just an attack on one of the Saudi oil factories. So that actually just gave you a spike in oil because it just adds concern over production and lower supply. And as we get into the back end of COVID and the economy's open back up, you're going to see such a demand for oil that we haven't seen in over a year. Nobody's needed oil. Nobody's been flying. Nobody's taking cruise ships. Nobody's driving. Nobody's commuting to work. Everybody's sitting their ass home, working from home. No one's driving their kids to school. Everyone's sitting at home. Okay, so there's been no demand for oil whatsoever. You go into now the summer months and like the weather's nice outside. COVID's behind us. Restrictions are lifted. There's going to be such a demand for oil. If there is not enough supply to keep up with that demand for oil, I think is going to continue to rise. I think you're going to be seeing $4 gallons of gas by the summertime. I'm sorry, I know that sucks, but that's what I think. That's also why I'm actually think that this inflation is going to be more of a problem than what the Fed is kind of initially leading people on to believe, because two things you need for there to be inflation, like two ingredients in the recipe, is strong economic growth, which I think we're going to have Q2, Q3. I expect to be some of the best numbers that we've ever seen in history since the post-World War era. And then I think you're going to see rising oil prices. So when you put those two things together and then you factor in all this additional money supply into the markets, I think that really gives us inflation. So I'm still bullish on oil. Yes, it'll pull back between now and the next month or two. It'll pull back. You'll get maybe a build in oil. We had a build in the last oil report last week. There was actually a really large build in supply, which actually was a negative number, which gave you a little bit of a pullback. And now this news with the Saudi oil attack spikes the price of oil up $2. I think Brent is actually over $7. I think Brent is actually over 70. Last I checked, Brent was over 70. U.S. crude, I think, is 67.80, something like that. I fully expect U.S. crude to go into the 70s, like $75 a barrel, I think, at least. So I would just look for pullbacks towards 60. $60 a barrel, I think, could start to become a new support level for the price of oil. So I would look for pullbacks in that area. And the oil stocks themselves, like OXY, use that as an example. OXY will directly follow the price of oil. So like if you see like a big pullback in the price of oil, you will see a big pullback in OXY. So it's up to you how you want to play it. If you want to actually buy and trade oil, I don't know if you're a commodities trader, if you want to actually go after oil, or if you want to go after some of the oil stocks. OXY is a great oil stock to trade. It's got great liquidity. It's got great movement. It's not like super, super volatile. It moves nice and smooth and will follow the price of oil. Could stimulus create a trap tomorrow where big boys ultimately sell into retail who get too excited about the temporary bump? I don't think so. I don't think. This is actually kind of where I'm at right now with the overall markets. Like I really think the markets are in a weird spot. The markets are in a weird spot right now because now that we have this stimulus, it's the markets have to. This is the problem with the markets, and this is why nobody really knows what the hell to do, and that's why if you notice last week, I'll just show you guys on the charts. Nobody knows what the hell to do. That's why the markets did this. Okay, nobody knows what the hell to do. That's why the markets rallied, sold off, rallied, sold off, rallied. These are massive, massive moves. Massive moves. Okay, where it literally was like, oh my God, we're going to make new all-time highs. And then it was like, oh my God, wait, the market's going to crash. And then it was like, oh my God, psych, never mind, we're totally going to go to all-time highs. And then we're like, no, seriously, we're going to crash. And then the market's like, no, we're going to go to all-time highs. Like the market has, like, people have no idea what to do because you're in such a catch-22 right now. You're in such a catch-22 right, such a catch-22 situation right now because you want the economy to do well, right? And you think if the economy does well and people get back to being, full employment, the market should go higher, right? But if the economy gets back really gets back quickly, and we get back to full employment faster than we originally thought, that's going to force the Fed to raise rates sooner than they initially said. So that's actually going to be negative. That's why it's a catch-22. It's like, yay, let's recover from COVID, but let's not recover too fast. That is where the delicate balance of the markets lie. It's let's recover from COVID, but let's recover slowly. Because if we get back to full employment faster than the Fed expects, and if we start to see inflation sooner than the Fed expects, that'll force the Fed to raise rates sooner than they want. That will cause the markets to sell off. But if we go through this economic recovery and we are slowly getting back to full employment and we're slowly recovering from COVID and inflation is slowly moving higher, that'll keep the Fed at bay and keep the Fed dovish and keep us at low interest rates for a long time. And when they start to raise, they'll raise very slowly. So you're actually at a point right now where the markets would rather the economy recover slowly than recover quickly. That's the situation that we are in. That is why it's so important for you guys to actually get an education to understand what is going to be moving markets and whether we go up, down, or sideways, to be able to take advantage of this price action and understand the different ways and styles and opportunities that you guys can be trading to benefit and profit from this action. Do not try to navigate this market alone. We are in a very, very unique time period right now that I don't think we've ever been in the history of the markets. With all of this stimulus, we've never had a situation like this with this COVID, with the economic lockdowns, because by nature, of course, economic growth was minuscule because the economies were closed. They were forcefully closed. Government was like, okay, economies, you're shut. Obviously, economic growth is going to slow. So then obviously once the government goes, okay, guys, open, obviously you're going to get this huge spike in economic growth. Obviously. So how is inflation going to react to that? Is it going to be this runaway inflation? Is it going to be this slow transitory inflation? We've never had a situation like this where you can look back in history and say, this was what the economics were when this happened last time. This has never happened before. That's why there's so much indecision in the market. That's why the market is so uneasy. That's why we're down 1,000 points 1 or 2 days, and then we rally right back the next 2, because one day everyone's terrified. The next day everyone's like, nah, things are great. Look at the data. Look at the jobs report that came out on Friday. You had this great jobs number that came out last week. 386,000 new jobs or something like that, above the expectations. You're like, wow, that's great. More people are going back to work. Let's buy the market. But then at the same time, you're like, oh shit, wait a second. If too many people go back to work too quickly and we get back to full employment faster than we thought, the Fed's going to raise rates sooner than we thought. Wait. Take profit. That's why you have this seesaw movement in the markets. Do not try to navigate this alone. Do not try to navigate this alone. All right, let's actually take a quick little check on futures as we are sitting here. We're flat. We just went red. S&P futures just went red. We're now down 0.07%. 0.06%. So futures have just gone red. Now we're down 0.09. All right, now we're down 0.1%, 0.1%. We are now red on your S&P futures. This is going to be interesting, guys. Will you continue to add your long-term portfolio if the market goes up, or will you wait for another pullback? Dana, I'm not adding to my long-term portfolios if the market goes up. I'm not adding. I've got a very, very large, diverse long-term portfolio. I added to it tremendously in March and April of last year. I'm sitting up very handsomely on those positions today. I'm not going to be adding to any of my technology holdings. My technology holdings are not being added to. What I started doing was I started adding to, and I'll just get into this now. I mean, I was going to talk about this later. we're going to talk about this later in the live stream. But I mean, I've already been doing this for an hour. We have a couple other good questions. Yeah, Dana, I'll get into my long-term portfolio stuff here in just a bit. I'll share with you guys the kind of the stocks that I've added, but we have a couple other questions that we want to do here. Been trading a few months, been in a few groups, and just from this, my first live with this group, just joined earlier tonight. Best money ever spent. Oh, Chief, that's awesome, man. Welcome to the family. Welcome to the family. Welcome, guys. My TCD fan. Everybody give a big warm welcome to Chief. Chief Rocka. I like the name, man. Chief Rocka. I like the name. Everybody my TCD family members, give a big warm welcome to Chief. He just joined the TCD family. Welcome, man. I look forward to trading with you, bro. I look forward to trading with you. So let me talk about my long-term portfolio stuff here, guys, real quick. I want to kind of weave that in. I want to talk to you guys a little bit about that because we've been getting into a lot of stuff here. I know I've covered a lot of information. I know this kind of might be a lot for some people to digest, and I want to make sure for those of you that if some of the stuff I'm saying to you right now is like over your head or if it sounds foreign to you, guys, don't worry, honestly, because this is all stuff that you'll learn as a member of True Trading Group. This is all stuff you'll learn in the courses, all stuff you'll learn in the workshop that I talked about that I just did yesterday on how to trade in down market. Covers a lot of this stuff too. You guys will get to pick this up pretty quickly. All right, let's talk about my long-term portfolio. So let me start things off by saying this. I don't buy stocks in my long-term portfolio when everyone's talking about them, when everybody loves them, when everybody wants, it's like all you hear about on TV. I buy stocks in my long-term portfolio when everybody hates them. Okay, when everybody hates them. Famous quote by the man, the myth, the legend himself, Warren Buffett. Be greedy when others are fearful. Be fearful when others are greedy. I was screaming from the rooftops. How many people were on my live streams a couple months ago when I was screaming from the rooftops, telling people to take profit in the electric vehicle stocks? 2 months ago, I was on my live stream begging people on my lives. I used to get at least a minimum of 100 questions about NIO. Every single one of my live streams, I would get a question about NIO. NIO going to 100. Is NIO going to 200? Should I buy NIO? Should I buy NIO? And every single one of my live streams, what did I tell everyone? Take profit. Take profit. Take profit. Take profit. And a bunch of people on my live streams call me a complete idiot. They're like, you're an asshole. You have no idea what you're talking about. Who is this rookie? And I'm like, yeah, I've been doing this for 17 years. I'm a total rookie. I've never seen this before. I have no idea what I'm talking about. But nonetheless, I stuck behind my word. I said, guys, take profits, please. Let me just show you guys a couple of examples here. When we kind of look at this and we take a look at NIO. See what NIO has done. NIO has gone 5 down to 35. XPEV has gone from 75 down to 28. LI has gone from 48 down to 22. Okay, like when you look at some of these stocks, Fuel Cell has gone from 30 down to 12. Okay, BLNK has gone from 65 to 25. Plug has gone from 75 to 35. These stocks have gotten absolutely gutted to the point where I'm actually getting people that are sending me messages saying, is the EV sector dead? I am actually getting messages from people saying, is the EV sector dead? How could you be asking me 2 months later, is the EV sector dead? When 2 months ago, you were telling me NIO was going to $150. Tesla's going to $2,000. Plug's going to $100. 2 months ago. 2 months ago, the EV sector was the talk of the town on every single media outlet, on every single social media channel. You name it, everywhere, everybody was talking about NIO and Tesla and XPV and LI and Solo and Workhorse and Ride. And everyone now is talking about Lucid with CCIV and all these other, electric vehicle stocks. I'm not buying them when those stocks are, when that's the case. There was such a premium on all of those stocks. There was such a premium on all of those stocks that I couldn't pay you to justify even 1/10 of the valuation that those stocks had on them. Could not justify the valuation whatsoever. And now that it was all hype, and excitement sent those stocks flying. I'm not going to buy those stocks in my long-term portfolio. I'll trade the shit out of them. I traded those stocks like crazy. I traded NIO. I traded XPEV. I traded LI. I traded Workhorse. I traded all of these stocks. I traded BLNK, but I didn't put them in my long-term portfolio because I'm not paying up on a premium like that on a sector that hasn't even started yet. People are asking me, is the EV sector dead? Dead. It hasn't even begun. It hasn't even begun. You have not even scratched the surface of the EV market. So to ask me, is this sector dead? It's crazy. It just hasn't started yet. Those stocks all ran just on hype and excitement. Like, this is so exciting. And it is. It's very exciting. It's an entirely new sector. It's awesome. It's like the internet, or it's like cannabis. The best example that I can compare it to is like the cannabis sector. When in 2014, these stocks went up 1,000%, but these companies did like $100,000 in revenue, and their stocks went up 1,000%. Okay, just because it had the word cannabis or marijuana on their website, the stock went up 1,000%. Same thing happened to the EV space. You can't justify the valuation on those. So what has happened lately? Those stocks have all pulled in 50% off their highs, some even more. Why is no one talking about them now? Do you see people on CNBC talking about NIL? Do you see people on Twitter talking about XPEV? No. Well, guess what? That's when I'm a buyer. I took advantage over Thursday and Friday of the massive sell-off that we've experienced in the entire EV sector, and I bought. Okay. I didn't only buy EV stocks. I bought, I'll go over all those stocks with you. I bought some battery companies, bought hydrogen fuel technology companies. I bought infrastructure charging companies. I also bought a non-EV related company as well. I'll talk to you guys about all of that, but I'll share with you the companies that I actually bought on Thursday and Friday. These are long-term portfolio positions, which means I plan on holding these stocks for 5 to 7 years minimum, probably 10 years or more. I'm probably going to be owning these companies. And I just initiated positions in them because I love the fact that now all of a sudden everybody hates them. When I'm getting messages, like, honestly, you guys are a great barometer for me, because when I'm getting questions like, oh, Mike, should I buy NIO? NIO is going to 150. I know not to buy it. Okay. But then when everybody starts asking me, oh my God, is the EV sector dead? Is it ever going to bounce back? That's when I know it's time to buy. Be greedy when others are fearful. Be fearful when others are greedy. Okay. So I took advantage of that sell-off. And when it comes to long-term portfolio stuff, you guys have to always have a shopping list of stocks. This is something I talked about in my workshop yesterday on how to trade in down market when we were going over long-term portfolio building. I talked to people about have a shopping list of stocks. That's a list of stocks that you want to own. Okay. It's a list of stocks you want to own, where if I said to you tomorrow, if tomorrow you had some special coupon code where you can buy any stock at 50% off, what would you buy? What would you buy? That's your shopping list. Okay. And then once you have that shopping list, identify buying zones. Okay. And in order to identify buying zones, I like to go look at the chart and identify potential support areas. That's what I do. I have my shopping list. And then once I have my shopping list, I create buying zones. Buying zones are just support levels on the chart. And when the stock reaches those buying zones, I buy. I usually have 3 different buying zones where I have a certain amount of cash allocated for each position. And say when we reach buying zone 1, I buy maybe 25 or 30% of the cash that I've allocated for that position. And if we get to support zone 2, I'll buy maybe 50%. And then if we get to support zone 3, I'll buy that last chunk. That's exactly what I did in March. When everything sold off in March, my shopping list in March was fully tech. All my shopping list in March was tech. I bought Apple, Amazon, Google, Facebook, Microsoft, AMD, Nvidia, PayPal, Square, Roku, Qualcomm. Like everything. I bought everything in March. Okay, when markets sold off, I went heavy into tech, and it was the right move. You know, a lot of those stocks are up 100, 200, 300% from when I bought them in March. Now I'm not looking to buy and add to my tech holdings. I already did that. And I actually think tech might underperform for the next year or two in a rising rate environment. Rising rate environments are actually bad for high growth names like tech. Tech is a high growth sector. Rising rate environment is actually bad for tech. It's good for value. It's good for value plays. It's good for the energy sector. It's going to be good for, you know, your dividend payers, like, you know, like companies like, you know, Pfizer and Pepsi and Johnson and Johnson and Altria and McDonald's and Starbucks and Home Depot. And these are going to be the plays. Now, they're not as sexy as like a Roku or something like that, but that's what I think is going to outperform in a rising rate environment. So, but what I did was I took advantage of the big sell-off in the EV sector because I didn't own any yet in my long-term portfolio. Okay, I didn't own any yet. But this recent sell-off has given me an opportunity to really get myself involved. So that's how I go about adding in my long-term portfolio. I like to buy when people are throwing stocks in the garbage. I like to buy them up. But you got to have a shopping list, and having that shopping list actually makes it easier for you to buy, because a lot of people have a very hard time buying a stock as it's going down. A lot of people have a very hard time with that. Now, there's a very big distinct difference between active trading and long-term investing. Active trading, I don't ever recommend people just buy stocks like as they're just going down. Like, don't try to catch a falling knife. That's active trading. That I teach you guys, you know, completely different strategies, completely different styles, different risk management rules. But like when you're talking about long-term portfolio building, I like to buy stocks, you know, once they kind of sell off and once everyone is trying to throw them in the garbage. So let me go over with you guys real quick the 6 stocks that I've added to my long-term portfolio. I'll cover this with you guys here again for those of you that missed it. And for that, I'll take you guys to the charts. Okay, so first, let's go over the stocks that I bought on Thursday, because I bought 3 stocks on Thursday. I bought 3 stocks on Friday. Thursday, what did I do? Thursday, let me actually pull up my... Let me see here, guys. Because I actually don't even remember what 3 we're on. I want to make sure I give you the right 3 on which day. Got it. Okay, here we go. Okay, so on Thursday, the 3 stocks that I bought on Thursday, one has absolutely nothing to do with the EV space, but I love this company, and that is SoFi. Okay, IPOE. IPOE. So IPOE is the SPAC play of my boy Chamath. And it was announced in early January that they are merging SoFi, which is a fintech company, into the IPOE SPAC. Now, I like SoFi. I'm very bullish on the future of SoFi. The merger has not yet been completed, but it was unanimously approved by both boards, SoFi and the SPAC. Okay, so both boards unanimously approved this merger, but it has not yet taken place. This was one of the stocks that was on my shopping list. And basically what I did was go all the way back to that little previous high when the SPAC began trading. And you see that was going to be right in front of that area was a buying zone for me. And when we dropped down into that level on Thursday, I added IPOE to my long-term portfolio at $15.65. $15.65 was where I bought IPOE. Stock is now currently trading at $17.60. Now, I do not care if this stock goes to $22 tomorrow. I'm not taking profit on it. This is a long-term portfolio position. I don't care if the stock goes down to 14 tomorrow. This is a long-term portfolio position. I plan on holding on to this stock for a very long time. Okay, but this is just an idea of talking about identifying those buying zones. It's IPOE. I added that to my long-term portfolio, 1565. Another stock that I added in my long-term portfolio was Plug, PLUG. Okay, now I am bullish on the EV sector in a huge way. Okay, I'm bullish on the EV sector in a huge way. Okay. But I am bullish from an infrastructure and battery technology standpoint. I am not as bullish on the electric vehicle makers themselves. I'm not as bullish on like NIO, XPEV, LI, Workhorse, Ride, Solo, AYRO, CCIV. I'm not as bullish on those names as I am on the infrastructure development companies and the battery technology companies. The reason being is because I think that a lot of people are severely underestimating, I think they're severely underestimating the potential of your current auto manufacturers like Volkswagen, Tata, like General Motors, and like when you think about like Audi, BMW, Porsche, Mercedes, Cadillac, Ford, like these companies are not just going to just lay down and they're just going to die. Like they're not going to make electric vehicles. Like, you guys nuts, like, I'm sorry. I don't think XPEV or LI or Solo or Ride are going to be these massive electric vehicle companies. I don't. Okay. I think a lot of people are underestimating a lot of the traditional auto manufacturers. And I think that, listen, out of all the electric vehicle makers, Fisker is another one, like NKLA, like, yeah, maybe two of those companies end up becoming major, major players in the electric vehicle market. The rest of them are going to go out of business. One thing we learned from Tesla is that being an electric vehicle auto manufacturer is an extremely cash intensive business. Tesla almost went bankrupt twice, and they had a billionaire as their owner that was funding the company out of his own pocket. So, a lot of these other companies, I don't think they're going to survive. I don't know which ones are going to be the big ones. I don't know. Maybe it's Fisker and CCIV. Maybe it's NIO and Workhorse. Maybe it's NKLA and Solo. I have no idea which ones are going to become the big player. I don't. I don't know. If you said, Mike, pick two, but if I had to pick one, I'd probably say CCIV because I actually really like Lucid. And maybe NIO with the whole, their connection with China and everything. So if I had to pick two, I'd probably say NIO and CCIV if I had to pick two. But I'm not investing in either one of those companies. I don't own any of those companies that I just said to you. I would much rather, this is the same situation when you talk about the gold rush. The gold rush, it was, okay, who made the money? Was it the people that were actually digging for gold, or was it the people that were selling the shovels? I want to sell the shovels to everyone looking for gold. I want to own the battery technology, and I want to own the companies that are going to put and install all of these charging stations all across the country. Because guess what, folks? Where would you charge your electric vehicle right now today? Obviously, you'd have a charging station at your home. But what if you're driving on the road and your battery's low and you need to charge your electric vehicle? Where would you go? I bet you more than half of you on this live stream have absolutely no idea where a charging station is within 10 miles of your home. So we're going to need all of these companies. We're going to need an entire electric vehicle charging infrastructure to be developed throughout the country. So I'd rather own infrastructure and I'd rather own battery technology. Okay, I'd rather own battery technology and infrastructure rather than the electric vehicle maker themselves. So Plug was one of the companies. This is another kind of like a fuel cell play. Plug is a company that I actually went in and I bought. A buying zone for me was in front of this $35 area, which was this gap fill, this previous high. And you can see Plug has dropped down into that area. And I went ahead and I owned Plug from $39. All right, I own Plug from $39. Stock is down huge from its $75 peak all the way back down now to 30. And I went in, and these are starter positions. Okay, these are starter positions that I took in these companies, which means, if I do have other support zones, like my second support zone on Plug is 30, and then my last support zone is going to be around 25. And then that's where I will add more to this position. This is a company I want to own for the long haul. And when I say long haul, folks, we're talking 10 years. Okay, so that's Plug. I stashed that in one of my long-term portfolio. Other company was CHPT. CHPT. Now this is infrastructure. This is ChargePoint. Okay, so they actually make the chargers. Okay, so this was a company that I also added. This is ChargePoint. Okay, I'll go in here. Ooh, let me delete that. That's too much me delete this. And here you guys go. Charge point, I bought right in there, $23 and change. I bought Charge Point at $23 and change. Stock is currently trading over 27. Stock is currently trading over 27. So this is another one that I stashed in my long-term portfolio. That was on Thursday. Now let me go over. I want to talk to you guys real quick about the ones that I added to my long-term portfolio on Friday. On Friday, I bought none other than Tesla. Okay, I love this pullback on Tesla from 900 all the way down to 550. Loved it down here to 550. So my buying zone on Tesla was in the 500s. Okay, anywhere in the 500s was my first buying zone on Tesla. My second buying zone on Tesla is going to be around 450. And then my absolute final buying zone on Tesla is around 350. I don't think Tesla ever gets back to 350, but if it does and we have some kind of major market crash, I will be buying more of Tesla if we get down to 350. But this is a great pullback on Tesla. I do not own any Tesla. This was an initial starting position where I got long at 558. $558 was where I bought Tesla on Friday. Stock is currently trading at 596. Okay, 558 was my entry there on Tesla. And you can see those are my three buying zones on Tesla as far as my long-term portfolio. I'm extremely bullish on Tesla. I think Tesla goes back. I think Tesla's $1,000 stock in the next few years. Okay, so that's Tesla. I also bought Fuel Cell. Now, this is kind of a higher risk play. I'm not as sure on Fuel Cell as I am on like Plug, and they're kind of similar plays in my long-term portfolio. I think Plug is a little bit more of an established company, but Fuel Cell got into my buying zone. My buying zone in Fuel Cell was between $10 and $12. That was my buying zone on Fuel Cell. The stock has come down from 30 all the way down to 12. And on Friday, I took a position at $12 and change on Fuel Cell. Stock is now currently trading at $13.40. Okay, at $13.40. So that was an initial starter position for me on Fuel Cell. And then last but not least, we have NNDM, is a company that I actually really like, Nano Dimensions. This is a company that I think has phenomenal potential many years down the road. I really like what the company's doing. They've done like 3 offerings during this rally, and they took advantage of the price action of their stock, and they did like 3 offerings. The company's got like $1 billion in cash. I really like what they're doing. I like their tech. That stock sold off from 18 all the way down to 7. And I actually bought this stock at like 669 or something like that. I'm long NNDM below 7. I got such a sick price on Friday. I'll take you guys to the charts. I got long this stock like right here. Like literally, it was such a sick price. The fact that I'm long NNDM from under 7 is nuts. Stock is now currently at $8, but this is another one that I stashed in my long-term portfolio. I'm very happy that I was able to buy this below $7. If this thing goes lower, another buying zone for me is going to be down around $5. If it does go lower, maybe I'll think about adding some of my position down there. But NNDM is one that I bought there below 7. So these are 6 stocks that I've recently added to my long-term portfolio. Again, that is IPOE, PLUG, CHPT, TSLA, NNDM, and FCEL. These are 6 companies that I've just added to my long-term portfolio. Again, long-term portfolio means long-term, guys. Okay. I'm owning these companies for many years. Okay. I recommend that all of you keep your long-term portfolios completely separate from your active trading accounts. Okay. You don't want to log into your day trading account to like actively trade and then see how much you're up or down in your long-term portfolio. Okay. I have 5 different portfolios with JP Morgan Wealth Management. And I also have a portfolio with Fidelity. I actively day trade and swing trade in light speed. Okay. I highly recommend that you completely separate your active trading funds with any long-term portfolio positions because you do not like, for example, Thursday and Friday when the markets were selling off, the last thing that you want to do is to stare at how much money you're down in your long-term portfolio. Guys, if I looked at my long-term portfolio on Thursday and Friday, I was down houses. Like if I was looking to see how much money I'm down as the market is selling off those 2 days. If you are doing that, you're going to freeze. It's going to distract you from focusing on intraday trading opportunities where you can actually generate income and make money while stocks are going down because you're just staring at how much money you're down in your long-term portfolio, and it becomes very, very, very distracting. Okay, it becomes very distracting. So do not be paying attention to your long-term portfolio while you guys are trying to actively trade. I'm not going to be staring at these stocks. I'm not going to be looking at them, like every day. Oh my God, let me see what's NMDM doing. I don't care. I'm going to own these stocks for 10 years. Okay. I own these stocks for like 10 years. Okay. Cool. So a nice, discussion there for us today. Long-term portfolio stuff, kind of stimulus, the overall markets. What does that mean? Let me do a quick check on the futures real quick. Now we're down 0.2%. We're starting to fade. We're starting to fade a little bit. What I think markets do here, I really hope that we hold above 380. I really hope we hold above 380 tomorrow. If we hold above 380, I think that the markets can slowly churn back up to 390. If we hold above 380, if we get back below 380, then I think by midweek, I think we're back in the low to mid 370s. Let me pull up my charts. I can show you guys what I'm referring to. I'll pull it up. So if we can hold 380, like if we can do something like this, okay, if we can do something like this, I think we're in pretty good shape. And I think you can see the market slowly churn up towards 390. Okay, on the SPY, I'm referring to the SPY right now. Okay, SPY is the ETF that tracks S&P 500. So if we can hold this 380, I think we can slowly churn our way back up towards 390. But if we can't hold this, okay, if we can hold 380 and we do something like this tomorrow, then I think we have to take our next leg down. And then at that point, I would expect the markets, or the SPY, I should say, I would expect the SPY to get down into the mid 360s if we can't hold up tomorrow. Like if you see a candle like this tomorrow, then I think by midweek, we're probably back down to the low 370s. And then maybe by the week after that, we probably get down into the mid 360s and then kind of complete this correction pullback. In the SPY, we've already gone into correction territory in the NASDAQ. The NASDAQ was already down 10%. 10% is what is considered the technical definition of a correction. The SPY and the Dow did not get to 10%. Okay. The NASDAQ is significantly weaker. It's what's been leading the market down as rates have been rising on bond yields. Okay. So as bond yields continue to go up, that puts pressure on tech. They've let us lower. But if the SPY can't hold 380 tomorrow, then I think that the SPY needs to would then complete its correction and maybe go down to like a 10%, maybe go down to like start to flirt with that 10% correction. And that would take the SPY down into like the mid 360s, something like this. Okay. And even if we go all the way down to the mid 360s, it still does not break us down. Technically, you still have all this support back here from these prior highs. Then you had the gap up day this was the Pfizer vaccine gap up day to all-time highs. And then that became support. So you have a lot of support down there, 350, 360 on the SPY. So even if we get this pullback, it's still not the end of the world. It's a tough call right now, guys, honestly, from, what I explained to you before about the balancing act that the markets are in right now, kind of how the markets are trying to digest everything that's been going on with, inflation and the reopening of the economy. And it's a delicate, balance that we're going to have to, it's a really delicate balance that we're going to have to play here. as markets try to figure out, is the stimulus good? Is stimulus bad? Is people getting back to work good? Is people getting back to work not good because it's going to create inflation, and cause the Fed to raise rates? What do we do? That's what the market's trying to digest, and that's what the markets are trying to figure out. Okay, so that's where we're at. All right, that's why you guys really got to get your butts in chat. Don't try to trade this market alone. The volatility and the ups and the downs. Listen, the ups and the downs, they are big and they are fast, and they're volatile. And you can really get caught with your pants down if you're not agile enough as a trader to identify these shifts in momentum and be able to capitalize while markets are going up or down. So that's why you guys really got to get your butts in chat, be part of True Trading Group, get education so you know how to navigate these markets. All right. What I want to know here real quick, guys, my THD fam, a lot of my THD members, a lot of you guys have never really gone through a lot of you have never really gone through a market environment like we are currently in. A lot of people have never dealt with this type of volatility before. That March sell-off maybe, and then going back to all-time highs, over the last year, a lot of you, that's what got you into the markets. A lot of you never experienced this type of volatility. I want to know, okay, seriously, I want to know genuinely, of my TTG members, how many of you are now better traders and feel more prepared to benefit in an up or down market because of True Trading Group? I want you to sound off in chat right now if you think you're a better trader and you're more prepared now to make money and profit, whether we're up or down, because of True Trading Group. Sound off in chat right now. Let me know where you guys are at. Hell yeah. Bruce Sears goes, with TTG, you never trade with your pants down. It's like having suspenders. Oh, that's awesome. Guys, pay attention. If you're not a member, just pay attention to some of the comments that are coming through in chat right now, guys. I really want you, and I really mean this sincerely. If you're not a member of True Trading, I mean this so sincerely. This is such a unique time period. And, with everything that happened last year and so many people kind of getting into the markets, and the markets can be so volatile and so, so whiplash-y, for lack of a better word. I really want to make sure that you guys, that you don't have just innocent, hardworking people that are just throwing money into the wind because they have no idea what they're doing. It's really a sin. And I really want to do everything that I can to help you guys kind of navigate these markets. That's why I do these live streams for free and I share all this information with you for free. But getting the full education, being in chat with us every day, seeing all of our trade alerts and really going through the courses, can really help set you guys up and help you navigate these markets so that not only you're better prepared to profit from this environment, but it can also save you from making a lot of really, really costly mistakes. And, especially with, I know a bunch of people were affected financially over the last year. And that could be a big difference for a lot of people. So I mean that sincerely. So pay attention to some of the comments that are coming through in chat right now from my THD members. Now I want to know, if you're not a member of True Trading Group, go ahead and type the letters TTG in chat right now. If you are not a member of True Trading Group, type the letters TTG in chat right now. Nice. Tom says, I just finished my full week being a member. Tom, what do you think, man? Welcome to the family, first of all, Tom. Tell us what you think. Let's see. Not a member. It's Z Vens. Tony Fugazi. I love your name, by the way, Tony. Prism Lighting. Thank you, Brady. Brady Butler says, I love your live streams. Brady, thank you, bro. I appreciate that. Jahan Shams, Aaron Fleming, Matt Carniol, Vitas Venkus, Alan Wu, Sherry Lang, Ken Weeks, Poison Rue. P. Moses says, I love you. I love you too, P. Moses. Oh, Buckle, not a member. Zach Cedino, Johan Gufres. Nice. Tom says, I love it. Beautiful. Tom, I'm glad to hear, buddy. I'm glad to hear. Deister just became a member. Deister, welcome to the family. Everybody, my TG fam, welcome Deister. Deister just joined the group. Deister, I'll see you in chat tomorrow morning. Let's see. Not a member. Dana Allen Wu. John Pyers. Nice. Brad Krantz just joined the team yesterday. Brad Krantz, welcome to the family. TGD fam, welcome Brad Krantz to the group. We got Judy Tubman is not a member. Walt Waters, Robert Belton, O Buckle, Skeezy P, Lori, NB3ZY, Beardsley, Robert Rawlings, NFA IMO says, I love you, Mike. NFA, I love you too. I love you too. I love all of you. That's why I do this, man. That's why I do this. Seriously. I really do love my THD fam. You guys have no idea. Like, I would not, like, I can't imagine going through the trading day like without my THD fam. Honestly, like, I love you guys. I cannot wait for us to do our in-person meetup. I got so many things planned for our group. You guys have no idea. You know, TTG has grown a lot over the last year and a half. And I mean, you guys ain't seen nothing yet. I mean, we are just getting started. We're just getting started. All right, so good. We have a lot of non-TTG members that are with us here today. I love it. Listen, for all seriously, all of you. Oh, nice. I just joined on Friday. My laptop is on the way. Love the live stream. Nice. Welcome to the family. Welcome to the family. Enjoy that free laptop. Enjoy that free laptop. Welcome to the family. Listen up, guys. All of you that are typing TTG in chat right now, first things first, I will never, ever bullshit you. Okay. I'm sorry if your kids are around and they're hearing me curse, but seriously, I'm never going to BS you. I will always shoot you straight. Trading, not a get rich quick scheme. Okay. You're not going to join True Trading Group and just start making boatloads of money tomorrow. You're learning a new skill, just like anything else. In order to learn a new skill and to master that skill and to excel at that new skill, you've got to be willing to put in some time, energy, and effort behind it. No one is going to do the work for you. All of my members that are commenting in chat throughout the live stream about, I'm a better trader, I'm doing well, this and that, they're commenting about all their success. They didn't just find this success magically. They put in the time, energy, and effort to actually learn this skill. No one's going to do the work for you. And it all starts with getting the right education, having the right tools, and being part of the right community, getting the right support in order for you to learn, trade, and profit. That is what THD is all about. I will help teach you guys how to stand on your own 2 feet. If you're just looking for shortcuts, you're looking for like a secret, you don't want to do any work, you're just like, Mike, tell me what to buy. And if I lose money, you suck. Like, if that's all you're looking for, get off the live stream right now. Seriously, TGD is not for you. But if you guys actually want to learn how to be an active trader, you want to learn how to establish long-term portfolio opportunities, you want to learn how to actively trade stocks and options, day trade, swing trade, you want to learn how to do all of that, and you want to get a professional education, the same education that I received when I worked at a fund in New York City, and you want to be part of a community of traders that truly gives a damn about one another and truly cares if each other succeed or fail, then you guys are in the right place. Okay. To be a member of True Trading Group, we have a 1-year all-inclusive membership. Normally, it would cost you $2,212 for the year, but tonight on this live stream, I'm actually offering a 37% discount for anyone that uses coupon code TTG121. That's going to bring the price of $2,212 all the way down to just $1,377. There's no add-ons. There's no upsells. You get access to literally everything we have and everything we ever will have with that one all-inclusive price. There is no monthly option. The reason why there's no monthly option is because, first of all, 1 month is simply not enough time for you to go through all our courses, go through the video library, attend a private study group, use the simulator, get familiar with all the resources, and see if you can actually become a profitable trader. 1 month, not enough time. That's reason number one. Reason number two, I and the rest of my THD moderators and our team give you 110% of our time, energy, and effort. Like I said, yesterday was Saturday. We had 4 hours of workshops, live education, and training on a Saturday. Jason, who's who's actually a partner now in True Trading Group and one of our head mods, he did a workshop from 12 to 2 p.m. Eastern on the cannabis sector. And then I did a workshop from 2 to 4 p.m. Eastern on how to trade in a down market, how to take advantage of some long-term portfolio opportunities as well, how to short, how to trade options, etc. on a Saturday. I didn't have to do that. Jason didn't have to do that. But I do it because I want to make sure that my THD fam always has the right education, the right guidance and mentorship to help achieve their goals. The same kind of mentorship and guidance that I got. I didn't figure this stuff out on my own, guys. I was lucky and fortunate enough that I had a mentor that was there for me the way that I want to be there for all of you. I will give you 110% of my energy and effort. You better give me that back. And if you don't, I'm sorry, I'm not going to give you an ounce of mine. Okay, so that's why there are no monthly plans. We have an annual membership or a lifetime membership, but the lifetime membership is reserved only for current THD members. Okay, the membership comes out to $3.77 a day when you use coupon code TTG121. Okay, now some people might be saying, "Man, $13.77, that sounds like a lot of money." Guys, trust me, it's not. You're not paying $1,300 just to get trade alerts. TTG is an entire platform that gives you products, resources, tools, education, mentorship, support. It's not just trade alerts in a chat room. Okay. Before I get into what's included in your membership, let me ask this real quick. How many of my THD family members that are on the live stream right now, how many of you have already made back your subscription cost? And do you think that the membership is worth the $1,300? Comment, sound off in chat right now. Listen, if you're not a member and you typed TTG before in chat when I said, hey, if you're not a member, type away, watch and read the comments coming through chat right now. These are THD members that have already joined, gone through the courses, using all the tools and resources. They are the ones that are telling you if it's worth it or not. Okay, my THD fam, let our viewers know, anyone that's considering joining, let them know if it is worth the money and if you've already made back your membership fee. And if you're not a member, please pay attention to some of these comments. The best way for you to know if a group is right for you or not, or if a service or if an education or anything, is to listen to your peers. The people that are commenting right now, they are your peers. There's no difference between them and you. They all found TTG same way you did, a live stream. They signed up, probably got a coupon code, and now they're the ones telling you, hey, man, if you're thinking about doing it, I did it. I'm there. I'm where you want to be. I'm telling you it's worth it. Listen to them. Don't even listen to me. Seriously, because you're probably going to say, oh, I've seen 100 YouTube people. How do I know that TGD is legit? How do I know that you're not just another, BS, furu that doesn't know his ass from his elbow, but, tries to pretend that they have a $5,000 course they can sell you that's going to make you a millionaire. So just pay attention to members, guys. We're also 5-star rated on Trustpilot. We have over 1,000 reviews on Trustpilot, 5-star rated, literally 4.9 out of 5.0. Over 1,000 reviews on Trustpilot. So guys, pay attention to your peers. Your peers is the best way for you to know if a service or a product is right for you. Okay. When you guys are becoming a trader, you also have to think to yourself this, like you're becoming the ultimate entrepreneur. And there's not many places that I know of or many businesses that I can start where I can invest $1,300 in myself, get an education, and then actually start making money with like $500. Essentially, what you're doing is you're starting your own business as a trader for less than $2,000. Okay. Now, what I said to you before, TTG is an entire platform. It's a platform for traders, not just a chat room and trade alerts. Okay. You get access to the top premium trading tools and products because we bundle them together and include them for free as part of your TTG membership. Included in your membership when you join up with TTG comes Benzinga Pro's real-time newsfeed. This is a real-time newsfeed that is right inside of our chat room that gives you live breaking to the second news alerts right inside of our chat room, guys. Okay. It also comes with a squawk box feature that lets you turn on your speakers and listen to the news as someone reads that news out loud as it comes across the wire. So if you're busy, you're focusing a trade, you don't have to worry about reading a news headline. Someone reads it out loud to you over our squawk box feature. You also get quote streams real-time level 1, full book level 2, options data. That all comes as part of a trade simulator that lets you guys trade stocks and options with fake money. So you can practice implementing what you learn in the courses, practice implementing it on the simulator before you start trading with real money. I highly recommend you guys start out on the simulator, prove to yourself you can make money before you start risking your hard-earned cash. You'll also get access to a Trade Ideas preset scanner that streams live to members during the day. This is a scanner that will show you stocks that are making new high of the day, stocks that have unusual volume, What are your top gainers on the day? We'll just let you know what stocks you should be trading on the day. Okay. You also have access to TradingView's Pro charting software. Okay. This is one of the most commonly used charting softwares by active traders today. All of these products are included for free with your TeachD membership at no additional cost whatsoever. You're going to get at least a minimum 10 easy to follow, actionable, real-time trade alerts per week from a community of traders that is sporting over an 80% win rate. We're fully transparent with you and TTG, guys. We keep an entire trading journal on our website, which will show you every single buy, every single sell, every winning trade, every losing trade, every break-even trade, right there on our website for you to see, so you can track all of our moderators' performance. You also get access to a small private study group with a TeachD moderator as a member of True Trading Group. This is a small private study group where you can ask questions, go over lessons and topics that you need help with. Okay. And I told you before, there's no upsells, guys. You get access to the entire curriculum. This is a 15-course curriculum. It's the entire curriculum. There's no special VIP pro courses that cost more money once you sign up. Okay, these courses include beginner and foundation courses. If you've never traded stock a day in your life, great, start there. We also have advanced courses. There's swing trading courses, option courses, trader psychology courses, how to trade during a market crash. There's even a course on how to do your taxes, guys. All of these courses are included. There's no upsells. Everything's included. You guys, they come in text and video format, whichever is easier for you to read. And then on top of all those courses, there's a video library with over 100 hours of additional educational video content that is recorded workshops and webinars that myself and the other moderators have conducted. Like I said, on Saturday, we just did a Weedapalooza and we did how to trade in a down market. So those are going to be loaded up in the video library by tomorrow. Some other examples of some videos we've done is like how to grow a $500 account to 25K, how to trade while working a full-time job, how to resist FOMO and have confidence pulling the trigger. These are just a couple of the topics that are in that video library. Okay, you get access to all of this. So now you're seeing the value of what you're getting for $13.77. Now you're starting to see why when I tell you that it's not a lot of money for what you're actually getting. But let me put things into perspective a little bit further. That Benzinga news feed alone, that Benzinga charges $1,188 a year for that service. It's included for free with your membership. Real-time level 1 and full book level 2 is $990 a year. It's included with your membership for free. The trade simulator is $750 a year, and TradingView's Pro charting software, they charge $720 a year for that service. Guys, all those services together would cost you $3,648 a year if you paid for them elsewhere. They are all included for free with your membership. Okay. They are all included for free with your membership. Hold on one second, guys. Okay. So here's the deal. Use coupon code TTG121 to get a 37% discount. The price is going up at midnight. Okay. Tomorrow, the price is going up by a few bucks and will continue to go up as we work our way up to $2,000. Okay. So you guys want to lock in the $13.77 price point? Do it now with coupon code TTG121 before the price goes up at midnight. And I did this to Adam on Friday. He was not happy with me about it, but I told you guys, I said anyone that signs up by midnight on Sunday with their membership would also get included a free laptop. Okay. Anyone that signs up by midnight tonight will also get included a free laptop. This is either going to be an Asus, an HP, an Acer, a Dell, a Lenovo, or Chromebook. Okay. Now listen, anyone that signs up by midnight tonight, so you're going to get the 37% discount. You're also going to get a free laptop. Okay. Our gift to you. We even are going to cover the shipping cost. It's totally free. It is our gift to you. Anyone that signs up by midnight tonight. We always give back to our members, guys. We always do fun, cool stuff with our members. We have a March stimulus plan going on where every day, every trading day, we give away $100 to 5 lucky TG members. That's something that we were doing while we were waiting for the government to come out with a stimulus package. And even now that, it passes, it's still going to be several weeks before checks are actually in people's hands. So this is just something that we were doing for our members, just to kind of help out. And then we also how close are we? 70, 75% maybe to our next giveaway. Every time we get 300 new members, we raffle off a brand new Tesla Model 3 or $30,000 cash, whichever the winner prefers. Okay, whichever the winner prefers. All right. So we are already 75% of the way there. So at that rate, you're looking at March 14th. Okay, you're looking at March 14th, Sunday. We're going to be giving away a brand new Tesla or $30,000 cash. All you need to do to be included in that raffle is to be a member of True Trading Group, so you can register and have your name included in the drawing. Okay, and then it's whoever wins, they get to choose. You want a Tesla or you want 30 grand. So we're always doing those fun giveaways with our members. And listen, the giveaways are a lot of fun, but guys, honestly, the real value is the education and the mentorship and the tools that you have access to as a member of True Trading Group. All right. Anyone that is still unsure about joining the group, I'm going to make up your mind for you right now. Seriously, I'm about to show you how much I believe that this can and will work for you if you're willing to put in a little bit of effort. I'm going to show you how much I believe in the education and how much I stand behind my platform. Anyone that uses coupon code TGD121 by midnight tonight, not only are you going to get a 37% discount, not only are you going to get a free laptop, but anyone that signs up by midnight with that coupon code, if you go through all of our courses, pass all the quizzes at the end of the courses, and attend a private study group, if you do those 3 things and still do not make back the $1,377 at least one time throughout the year membership, I will give you all of your money back. I'm going to give you a full refund if you don't make the membership fee back at least one time throughout your membership if you do those 3 things. I'm putting my money where my mouth is. That is how confident I am that this can and will work for you. I see the success that my members are having. If they weren't having success, I would not be able to offer you this money back guarantee. It's just that simple. It's just that simple. Everything that I'm telling you right now is all on the checkout page. The money back guarantee is on the checkout page. The free laptop, it's on the checkout page. Okay, it's all on the checkout page. So just use coupon code TTG121 to take advantage of everything I'm telling you guys here today. And then if you're still unsure, we do have a 7-day trial. We do have a 7-day trial, guys. If you want to try us out for 7 days, you can. It's only $3. It's literally just $3. One-time payment, not reoccurring, no auto renew. Just go to ttgthree.com. Again, that's ttgthree.com. You'll get 7-day access to our dashboard. You'll get 3 days to come in our live trading chat room. And you'll also get 3 sample trial courses included as well. Okay. You can upgrade to a full membership at any time. Okay. If you guys sign up tonight for the trial, you'll be able to join us in chat tomorrow. Okay. It's just $3, guys. Literally, you spend $3 on a cup of coffee. Okay. You guys have spent $3 on a cup of coffee. Okay. So again, there's no reoccurring charge or auto renew. You can upgrade to a full membership at any time during your trial if you want, but you're under no obligation to do so. Okay. So that's it, guys. You want that 37% discount? You want the free laptop? You want to be included in that Tesla giveaway? Guys, use coupon code TTG121 right here tonight before midnight. You have less than 2 hours left before the price goes up, and then you guys won't have that laptop offer anymore as well. Okay? So that's it, gang. Thanks for joining me here tonight, guys. I hope you guys enjoyed the live stream. We talked about a lot of macro stuff. I hope this helps you guys with kind of your trading and investing decisions. And I'll see you guys in chat tomorrow. We'll have to start the week off right. All right. We got stimulus. Let's check on futures real quick. Futures are actually down 0.2 of a point. So it looks like we might be, depending on what happens in the overnight session, we might be looking at a small gap down. We'll have to wait and see. All right, we'll have to wait and see. I'll see you guys all later tomorrow. If you haven't done so already, subscribe to the channel, turn on your notifications, and of course, turn that thumb blue. I'll see you guys later. Have a great night.